Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the CBOE volatility index. This is known as the VIX, and each and every week I talk about the VIX as a leading indicator that's a contrarian leading indicator to the S&P 500. And if you've been following along with my reports each week, you'll know that I leave my forecast lines in place so you can see how accurate these forecasts really are. And once again, we hit our numbers spot on in all markets. This was the line that I drew last Friday, saying that the volatility index would most likely drop, mainly because we saw these long shadows above the candle, and I pointed out other times where the shadows were long, here and here, and what the result was after those shadows showed up. And like clockwork, the VIX dropped, the end of the line being my target price, so we hit that actually on Wednesday, followed through on Thursday, and now we have a green candle on Friday as we close. Now this horizontal line, we call those flat lines, as a role reversal line right there, that is a support level. So what does that mean for the VIX next week? Well, I like the fact that the candle is green because that gives us a clear sign that the volatility index is being bought up by the traders. But the bad news is, for the general market, a bullish VIX is bearish for the S&P. So I will draw this forecast line out just like that. I think we will see a bounce on the VIX, which again is bearish for the S&P. So let's go to the S&P. I'm going to look at the ETF, the spiders, ticker symbol SPY. And again, as I zoom in here, you can see that my forecast was spot on. I said we would most likely move lower and then bounce. We actually violated that support level and went right to the next support level, which is down here from these lows right there. So that bounced perfectly off of that support. I'm going to erase this, and you can see that the end of my line was my target for the VIX, and look at that, we closed right at that line. And what does that mean for the spiders? Well, I want to point out something that's very important for the S&P. As I zoom in here, you'll see that there's a gap below the market. This red candle on higher volume is telling us that the sellers are starting to move in. So I think we will move lower Monday and Tuesday to fill that gap, and we might even go a little bit lower, and here's why. On Tuesday is the election day for the midterms. I think that could have an effect as investors move to the sidelines Monday and possibly Tuesday during the trading day. The results will not be known until the evening of the 6th, and even after that, there might be some very close races that might even go into the next days that follow. But I think investors are going to lighten up on their position, therefore putting some pressure on the S&P. We might see a bounce after that. We'll have to see again, but right now I think most definitely we're going to move lower to fill that gap right there. So keep an eye on the S&P. Now if we look at the diamonds, which is the Dow Jones Industrial Average ETF, again, we hit my target. We bounced right off of this key support level. Notice back here the gap filled, just like I said it would. 80% of the time gaps fill, and then again 80% of the time after a gap fills, the market bounces. And hence the reason why I put this upward forecast line in place, because we would most likely have had a bounce, and we did just that. But look, again, on the diamonds we have a gap. So I think we are going to move lower on the diamonds to fill that gap, and then possibly a bounce after that. So it's going to be an interesting week next week. with all that's going on in the political world and the economic world. The jobs reports came out very positive for the economy. It looks like unemployment is going to stay low for a while. We're creating 1,000 new jobs each day in the industrial sector, and so we are looking really good economically, and we'll see if the voters will support that type of move going forward. So we'll have to see. Like I said, I'm going to erase this line so we don't cross signals there. This is my new forecast line, with the end of that line being my target. Now, if we look at a more broad-based index in the Russell 2000, obviously that tracks 2,000 stocks. Look at that. We bounced exactly as we said we would. On Tuesday, we had a bullish engulfing pattern. The reason I said we would rally is because of this hammer right there. See that long shadow under the candle? Well, that tells us the buyers are coming in. And when you see something like that on a major support level like we had back here, odds are we are going to rally. And again, that's exactly what happened. On Tuesday, we had that bullish engulfing pattern. And then what happened? We rallied. We hit my target, the end of the line right there. And what is that? That's called a spinning top. It's a sign of indecision. We generally see those at pivot points. And the second thing that I see is that we are right up against what's called a roll reversal resistance area right here. You see this form of support is most likely going to act as resistance. So I think that the Russell 2000 will pull back just like that and then possibly bounce. The key here is whether or not we have a higher pivot point next week. That's going to be very interesting to see if that happens. If we do see a higher pivot point or a higher low, that could really set us up for a year-end rally that could be very profitable for the short-term traders. Now, if we look at the Qs, that's the NASDAQ market, you'll see this one had a bounce just like I said it would. We violated that support level just a little bit, but then we ultimately bounced, and we did so with a gap up. So I'm going to erase this. We hit our target. I'm going to erase this and draw the line for next week. I think we're going to move lower in the Qs, possibly bounce just like the rest of the markets after the gap fills. And Apple took a big hit today, and that really brought the whole tech sector down as a domino effect really had its way with the tech sector. So we'll have to see again what happens after that gap fills. If you'd like to learn more about what we do at The Market Guys, just go to themarketguys.com, click on the video tab right there, and I'd like to point your attention to two videos actually. The roll reversal, which is what I talk about all the time right here. You see that video, it's a very short video, 6 to 7 minutes long. And I'd also like to direct you to trading the gap, so you know about the gap fill rules and the other principles that apply to gap trading so that you can put the odds in your favor. Really having a great time here at The Market Guys putting our videos out. I hope you enjoy the content. Please tell your friends and family members about them and follow along each and every week. So have a great week, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.